Also, recording has been enabled for the event. So yes, I will be beginning with what is equity research, today's topic, and the details about it very shortly. So hello everyone, let's just get started now. Meanwhile, others can join in. So thank you firstly for taking out the time for this program or for this event rather. Uh, Equity research, getting started, or what is equity research, very basics of it. A quick introduction. I'm Anurag Sundarka, co-founder of Zebra Pro and Zebra Learn. So very quickly, what we do, Zebra Learn is an educational enterprise, is an educational company where we talk about finance. We talk about everything finance, actually. We talk about, we conduct regular events starting from today. So this is our first event. So small shout out to us for that. So we'll be actually conducting a lot of regular events now. And we conduct courses. We have community. So all of you, please join the community. And this is what we do very quickly. Personally, I am a CFA. I've completed my MBA. I've worked as an equity research analyst for 3 years. After that, building on the experience there, we started developing Zebra Pro. That is a tool that makes the life of an analyst. The idea there is to make the life of an analyst simpler. So this is what we do. I've written a book called Rich Ponds, which talks about equity research, particularly industry research. So I'll be sharing some of my experience, uh, some uh, some details about equity research, how it works, and everything about it. Uh, Before we begin, our motive is learn by doing. Everything that we do at Zebra Learn, it's all education, learn by doing. So at many places in this event, what we'll do, we'll use up roughly 60 minutes of your time. Any questions, please put it in the comment box, in the chat box. Uh, would love to connect after the call, after the event as well. So any during the duration of this, what we'll do is we'll try and do the simpler things by doing. Actually makes a lot of sense when we actually do stuff. One thing learned by doing is much better than 10 things simply heard of. So let's get started. What is equity research and everything about it? So just a second. So I've been told that internet is having a bit of issue here. No, I don't think that should be the case, but just give Yeah, so I was told no audio. I think now it's better. So let's just very quickly move on. So first question, very simple one. What is equity research? So let's not get too technical about it. Let me just ask you a very simple question. If I tell you if I tell you invest rupees 1,000 in a company called, let's say, Tata Elxsi Limited. A few of you might have heard about it, but let's say a few of you are not aware about it. Or another company that you're not aware about. Uh, eh, the name can be anything, actually, XYZ. What are the first few things that come to your mind? What are the first few things that come to your mind? Uh, what will be your first 2, 3 questions when I tell you to invest in this? So you can put it in the chat box here. Whether it is debt free. Okay, a great question. First thing that I'll look for is, yes, does the company have loan on it? Anyone else, feel free to put questions here. So this particular process, this questioning and answering, this is exactly what equity research is. I don't see a lot of questions here so far. So I will ask something like, what is the company's sales? Will the sales continue for next year, the year after that? Or will it grow? Or will it reduce in size? Low PE, okay, a technical one, but okay, definitely. So for those who do not know what PE is, let's not get confused. Let's stick to basics. The questions will involve from our end things like who runs this company? What is the sales? What is the profit margin? Even before that, what does the company sell? Is the company debt free? Again, a question about PE, as it was asked. Increasing sales and profit. Wonderful question. Is the sales increasing? And if the sales is increasing, is the profit also increasing? Next question, management of the company. Who is running it? So this process of questioning and answering, this is exactly what equity research is. What are the different questions that can come up? What are the things that can go right and things that can go wrong? And to do that, we need to understand a company from all given angles. So this process of picking up a company, identifying the company, its operations, fundamentally, how is it acting from an investment point of view? Now, I'm not very concerned. Let's say a question like the company is facing issues hiring in the short term. That is not something that concerns me as an investor. That is a short-term issue and it will be repaired. Let's say the company is facing permanent problem where they are not able to find good talent. Then that's a question that's important for me. That is something that becomes relevant from an investment point of view. So this is the process of equity research. What the process of analyzing a company, its operations, where things can go wrong. See, where things can go right, it can take care of itself. I don't need to do anything, or an equity research analyst does not need to worry about that. What they need to worry about is where things can go wrong. Let's say you invest in a company and it's run by 2 brothers. What if 2 years down the line, the brothers have a fight between them? Now that is something that's a big risk for you, right? The management might have some sort of misunderstanding. They might not get along. What if something, let's take a real case example, let's say, real world example, let's say. Uh, for example, for investors of, let's say, crypto platforms right now. Crypto platforms have a lot of private investors, but all of a sudden, government regulated the industry by introducing a 30% tax on profits, and the volumes reduced quite drastically. So these are things that you need to understand as an equity research analyst. What can go wrong? What are things that might not work out? So moving on, what are the broad topics that an equity research analyst has to cover? First and foremost, industry and economy. Which country am I investing in? If we are investing in India, we are aware of how things work here. Let's say we are investing in a Korean company. First things first, we need to understand the Korean economy. What is its currency? Because you'll be investing in Korean currency as well. How stable is the currency? Let's say you are investing in Venezuela, a country that has very unstable currency. in that case, maybe your company does well, but the currency is not doing well, and you might have to face a loss. So first things first, which economy? If you are investing in India itself, the economy question goes out because we are aware of how things work here. Next, industry. How is that particular industry doing? For example, now what is an industry first? Industry means any type of work. For example, we have 50 companies in India that sell ice cream. So it's ice cream industry together. Companies can be different, have more Vadilal, quality walls and naturals and whatnot. But together they form the industry, together they form ice cream industry. Anything that affects the industry will affect all companies alike. Not alike necessarily, but will affect all companies. So for example, let's say ice cream has seasonal sales. Ice cream companies do extremely well for 6 months, and for remaining 6 months, they are just stuck with inventory, very low asset turnovers, low sales. So in that case, this will be the case with almost all ice cream companies. Very few will be able to defy them. Same is the case with something with a company called, let's say, Symphony. Symphony sells air coolers, Symphony, anything into cooling actually. So they also have very seasonal business. Let's say something like crypto that we spoke about, crypto exchanges. For them, this news that had an industry-wide impact, irrespective of the company, irrespective of the products that are there, the companies that are there rather. So first, what we have done, let me just write it down very quickly. First things first, what we have done, we have understood the economy. Once we understand the economy, okay, we know the country, let's say India in this case, then we identify the industry, which is the industry that we are interested in. And going right here is way more fruitful than going right in the next step, that is company. So once you have identified, okay, I like ice cream industry, how it's positioned. The companies are doing well. So after that, what happens? We talk about companies. Which are the 5-6 companies that are doing well in this space? And which companies would I want to invest in? So competitive landscape for that. How does the competitive landscape look like? So for ice creams, you can have a competitive landscape actually is not that intense. Let's take another example, telecom in India. So for telecom in India, we have 3 players, Airtel, Jio, and we also have Vodafone Idea. So now this is a competitive landscape that's fiercely competitive. They are fighting on on pricing. So this is a place where competitive landscape might not work out too well. The industry is too competitive in this case. So this is how, this is exactly what we're trying to understand is what an equity research analyst does. They understand the economy, the industry, the company. Now, once they have a certain liking of company, that, okay, this company, Jio, for example, let's say in this case, let's just take a hypothetical case. Jio, for example, has a very rich parent. They produce a lot of money in their core business. So they should be able to outperform the competitors on pure merit of their capital that they have. So this is something that an analyst says that, okay, 5 years down the line, Jio will have, today it has 30% market share. 5 years down the line, it will have 60% of the market. So in that case, they might end up investing in Jio, or they might end up looking in Jio much more aggressively. Now, once you have identified the companies that you're interested in, next thing is to conduct valuation exercise and to identify or project revenues, profits. So not just revenues and profits, but it's actually a very detailed exercise. It's called financial modeling. Let's not get caught up in the jargons. But what does it mean? It means for the next 5 years, they try to understand the revenues, the profits. And after that, or alongside, not after that, they conduct valuations. Let's say if I tell you Reliance's share today is trading at 2,000 rupees. Now, should I buy it or not? So I don't know. 2,000 means nothing. So as an equity research analyst, first thing that we'll do is we'll ignore these numbers, the share prices. We'll talk about market cap. So Reliance's market cap, let's say, I am not aware of the exact number. Let's say it's 14 lakh crores. So now should you buy the company at 14 lakh crores of market cap? So here of the very good input that came up earlier was low PE. So that is used to understand PE is just one metric. There are n number of other metrics that is used to identify that should I buy the company right now or should I wait for the company's valuations to drop below 10 lakh crores? So if for this to happen, what should happen? The price should go, let's say, below 1600. Just hypothetical numbers. So if the price goes below 1600, the market cap is decided. Actually, let's not go in the technicals. Actually, we'll be confused. The market cap is calculated using the share price. So if the price goes below a certain point, what will happen? Then it might become cheap. The company's valuation might become cheap and it might become investment worthy. So this company at 1600 might be a buy, but if you end up buying it at 3000, let's say, then it might not turn out to be a good investment, even though the company is good. So first, what we are doing, identifying the right economy industry and then the company. Then we are understanding the numbers in detail. And then we are identifying a good price to buy it. A good company bought at wrong price will lead to poor investment returns. So this is something that's very important to get this right as well. In fact, you can buy a poor company at a very good valuation and still make a decent return out of it. But a good company bought at extremely high valuations will lead to extremely high price actually, will lead to poor returns. So this is what equity research does. The process of doing all this, going through annual reports, talking to people, going to few geo stores, talking to few geo customers, Airtel customers, this process of identifying, collecting data, analyzing it from an investment point of view, this is called equity research. And this is what we'll be talking about today in greater detail. So very quickly, let's just move on. And meanwhile, if any of you have questions, just keep throwing, just keep putting it up. Yeah. So we will talk about all the steps one by one. Where is equity research used exactly? So equity research is used in public equity. Public equity means mutual funds. So what happens is whenever a common person invests, let's say 5,000 rupees in mutual fund. So mutual funds has a team of analysts who decide where to invest on behalf of these people. So these people are called equity research analysts. So first, mutual fund invests in public equity, that is listed shares. So shares that we see on the stock market. So this is called equity research. First, this is where it's used. Second, it's PMS. So PMS is portfolio management service. So small companies will help you with your investments, will design a portfolio for you based on your requirements. So there again, equity research is required to identify different companies that can be included in your portfolio. Third, insurance companies use a lot of equity research. So whenever we pay premiums to insurance company, okay, I have a question here. Let me just get that question after public equity. Whenever insurance companies get our premiums, they don't have an expense right away. They have an expense that's to be paid whenever there is a claim against it. So this capital, they do not keep it with themselves. They invest a part of it in debt, another part of it in equity. So again, equity research is not something that's used in debt. Debt means, let's say we are writing a loan of 50 crores to XYZ in institutional case. Let's say as common people, let's say we are giving 1,000 rupee, we are putting 1,000 rupee FD in a bank. That is a form of debt. That is a form of loan. Here we are talking about taking ownership. You are buying ownership. This can go down to zero. This can go up as well. So first, public equity, insurance companies. Second, brokers use a lot of equity research. So you might be receiving, or you might have seen a lot of brokers sending reports that, okay, this buy Kotak Mahindra Bank or buy Reliance or buy whatever company. So to create that report and to do the research behind it, and again, equity research analysis is required, or equity research is required. let's just move on with chat. Lately, I've seen foreign investments matrix playing massive role in way market behaves. Does equity research include this too? So by foreign investments, what I'm assuming, foreign investment matrix, what I'm assuming is FII buying, FII selling, FPI buying, and FPI selling. For anyone who's confused with the terms, it means foreign portfolio investors, foreign institutional investors. That means people from outside India investing in Indian stocks. So yes, foreign investments matrix has always been very, very critical, especially for the Indian markets, because domestic investments in India historically have been low. However, it's picking up off late. So what happens is at the end of it, these are included in so stock prices move in by basic economic fundamental thing called supply and demand. So whenever anyone sells, the prices are supposed to fall. So if FII selling is there, if FPI selling is there, so that means the prices will fall, the prices will fluctuate. But the thing here is these FIIs or anyone rather, the buying and selling is something that's for a particular period of time. Maybe FIIs are buying a lot of shares in April, selling a lot of shares in, let's say, May. So in that case, what happens is, as an equity research analyst, it's not our job to forecast whether or not people will buy this, people will buy more shares in the future, or people will sell more shares in a particular period of time. It's not possible to forecast that, okay, FIIs will buy more next year or FIIs will sell more next year. What our job is, we need to focus on the business. If it's an ice cream company, will it sell more ice cream next year? If it sells more ice cream next year and even more ice cream next year, irrespective if people are buying that or selling that, eventually the stock markets will reflect, the prices will go up. Eventually, if the company keeps on growing their sales, profits, and the price is not increasing, let's say people are selling that, FIIs are selling that share, that means price is not increasing. So that is not our job to worry about price is not increasing that much, because it's not possible to do. What we will do as analysts will we will just focus that the company is performing, and if it's performing, then what we'll do, then we will be fine, because sooner or later the prices should increase. Got it. So yeah. Next, equity research is used in private equity. That means buying private shares for small companies, unlisted companies. Let's say you buy a few shares for a company called Dream 11, let's say, that does not sell on the stock market. So here again, equity research is required. Venture capital, so small startups. In fact, a startup like ZebraLearn. So for them also, venture capital might want to. So there again, research will be called equity research. Then for investment banking, third. So here what is happening? Investment bankers go through deals. That means buying of company, let's say Cinemax was bought by PVR. So in that case, Cinemax, so an investment banker was included in that deal to do that deal. Actually, PVR bought Cinemax a few years back. Lately, Inox and PVR have merged together. So in all these cases of buying and selling IPOs, investment bankers are involved. And if the deal happens, they get 2 or 3% cut of the entire deal. So these are the uses of equity research. We will mainly focus on the public side, the public equity. So now let's get to the interesting part. First things first, how do you generate ideas in equity research? So we did a survey actually with 90 participants, all of them equity research analysts. And this is how they said they generate investment ideas. And a lot of us, it will be very surprising. We will not find things like tips. We will not find things like, let's say, broker reports directly, retail broker reports, none of those things. So one, how do they create ideas, generate ideas? Peer recommendations. So equity research analysts will be well connected to each other, and it always pays off to be connected with those who are tracking companies. Even if you're doing it as a retail investor, it's good to do it alongside a group because news flows well in that case. So peer recommendations, what others are doing, how have they got their data, what ideas are they working on? So that is number one. 38% people said they do this. 20% people said newspapers and magazines. I personally believe work a lot on this. Newspapers and magazines, wonderful sources of ideas that happen here, that you get here. Number three, a tool called Screener. So there are multiple screeners actually. So what happens with screeners are you can put certain circumstances. Let's say let's say profit margin should be more than 10%. Sales growth should be more than 15% previous year. And so yeah, these two things, let's say. So, and they'll throw up out of 5,000 companies, which are 600 or 400 or 300, whatever the number is, 300 companies that meet your criteria. And then you can further narrow them down by fine tuning and making it, adjusting the numbers so that you get a list of 15 or 20 companies that meet your that meet your preference. Next, corporate announcements. So corporate announcements mean companies constantly have announcements. So let me actually show this to you. There's this site called Bse Corporate Announcements. So let's just search this. There's so yes, every day BSE is Bombay Stock Exchange. They have a lot of these announcements by different companies. So analysts have to keep a constant track on these announcements. So today there are 1,059 announcements. So 1,059 out of these, roughly 950 will be noise. That is, there'll be regulatory announcements that, okay, the board did this, the board met and all these things. But about 80 or 100 announcements will be such where the company has, let's say, entered a new market. The company has changed management. The company has taken over another company. So let's just see if we get something here. I can't see so far. So board to consider dividend here. So that's a simplistic one. So if we keep on scrolling, so first 21, I don't see anything as such. If we keep on scrolling, we will find something, let's say acquisition. Let's do it actually. So, so appointment of internal auditor, but not so relevant here. Change in management. Okay. So this particular company has a change in management. Now, how significant is the management change? Is the CEO changed, or is someone from a smaller rank changed? So we can open this here. So let's just see what the company has, what has changed. Okay, the CFO has changed. A new CFO has joined the company. So you need to understand as an analyst how significant is this. And this is another very important source of ideas. Next, we have management meetings. So constantly what happens is, and this is something that is very time taking, but very, very rewarding. So what happens? The companies, just a second. So the companies constantly keep on holding meetings. That is, they will invite a lot of, they'll invite analysts. Okay, come and hear our story, what we are doing, what new products are we introducing. And people will attend those meetings, and a lot of ideas are generated from them. You meet the management, you understand, you can ask questions to them. So this is how most of the ideas are generated. Other than this, you go around, you go outside, just have a look. Whatever new stores are opening up, there's a good chance a listed company might be behind it. And just have a look, because if companies opening stores in your city, it's likely that they are opening stores in other cities as well. That is, they are in growth mode. So that might be a rewarding situation for us. So things like these are how ideas are generated. Again, ideas are good ideas, take time. You don't need 50 ideas in a year. You need 3-4 ideas in 1 year that you can act upon. And that is way more than rewarding for an equity research analyst. So this is how ideas are generated. Next, the research process. So from a research point of view, we have developed something called 9-point business circuit. This is what we follow. And these are the steps that are required. So let's just very quickly understand what exactly are these. So first is the value proposition. So value proposition exactly means product. What is the product the company is selling, and what is the value that it delivers to the company, to the customer rather. So for example, let's just take an example of three categories of phones. Let's say first category is iPhone, second category is something like Samsung, maybe MI, Oppo, Vivo, these category, and third category is Indian brands like Lava, Intex. So what is the function? And each of these three phones are selling, right? So what is the function, or what is the product doing other than obviously being a phone? So from an iPhone point of view, other than providing all the features, it's providing a lot of social value to the user, to the customer. A lot of customers buy iPhone for the social benefit that it requires, and that is a huge advantage that iPhone has. That no innovation, nothing from the other companies can match that. So this space in mind of customers. So this is the value that iPhone delivers. Samsung and Oppo, all these guys, they provide good features in relatively lower prices. So, let's say these are mass market products. And even below that, basic phone functionalities by Indian brands, basic functionalities in extremely economical manner. Let's say around five phones, around 5,000. So each of them is filling a different set of functions. iPhone, obviously, they have features, a lot of features. So we need to create a list of what is the product exactly doing? Why is the product selling? Is the features the main reason why iPhone is selling? Maybe. If that is the case, then features. iPhone's camera is wonderful. So let's just focus on that. So let's just take another example, cakes and ice creams. So in summers, cakes might not do that well, but ice cream will do very well. In winters, ice cream is often substituted by desserts, cakes, on things like these. So in that case, again, what is the value that the product is creating for the customer? If the product is not creating any value, then in that case, the companies will die without sales initially itself. So in startup investing, this point becomes most important. Actually, these two will come to business model, but these two. Is the company building something that's valuable, that's useful to the customers? If that's not the case, the sales will never come in, products will never be used. And if sales are coming, that means the company is building something that has value. What value? That is our job as an analyst to identify. Second point is business model. What is the business model? How does the company make money? So what that means, how the company makes money. Let's take an example of Facebook here. What could have Facebook done in 2008 when it had over 1 billion users and it was not making a single rupee in revenue? So it could have gone two ways. It could have asked us to pay rupees 100 per month, pay per year, whatever, subscription basically, to use Facebook. Second way, it could have done ads, which it did. Third, it could have created its own product and started selling on the platform. A lot of ways to follow. So this is business model. What exactly the company does to make money? Do they have subscription? Do they have ads? Do they sell products? There are n number of innovative business models actually. Freemium, like they are giving out something in free and the advanced features are paid. So n number of business models. How is their cost? Most of their costs are fixed. That means, let's say, salaries, things like rent, or are they variable? That means they can decide when to increase cost, when to decrease cost. So these two factors are most important for a startup. Whenever you are investing in a startup or analyzing a startup, these two become most important. Everything else follow after that. So next, once we have for larger companies, because sales is there, value proposition is definitely established. Business model needs to be understood. Next question that we come after this is to industry. How is the industry? Is it healthy? So what happens is, let's say a normal ice cream seller might be more profitable than a very good cement factory. So I don't mean ice cream seller, mean roadside ice cream, but let's say ice cream chain. So ice cream chain might be much more profitable than a cement factory. As an investor, you can invest in both of them. You don't have to go out and do either of the businesses. So which one will you go with? The one where a average player or a below par player is performing better than an industry where the best player is not making that much money. Why will the best player not make good money? Because the industry's health is not that good. Because the industry may be too competitive, let's say. So that is one of the reasons. So we need to understand the industry analysis. Next is evolution of industry. So what we mean by evolution of industries, how has the industry evolved over time? Who are the players early on? So for example, telecom. It has evolved from being a very profitable industry where everyone could start their own, a lot of players could start their own, survive, sell a few SIM cards and make good money. From there to a very, very competitive, very capital intensive industry over time. And a large player with a lot of capital is dictating the terms. So their evolution becomes very important to understand that where is the direction going. Going ahead, we expect the large player with capital to keep on dominating, or else smaller players or other competitors find more capital for themselves. So these are things that are very important to understand the industry. Next is what is happening in the industry, the trends. So again, with crypto, it's being regulated worldwide slowly and steadily. So that's a trend that's going on. So n number of trends keep on coming and going. Let's say a few years back, online gaming became all of a sudden huge thing. And with time, it has now grown itself. So online gaming and participation of people has increased. And that is a major, major trend. Online food delivery. That was, so food companies like Food Panda, they have existed for 10 years, maybe over a decade. But only off late, like last 4 or 5 years, Swiggy and Zomato have really cracked the code. So now online home deliveries, what they have allowed for small kitchens to start shipping food, to start selling food. So these are trends that are going on in different industries that have major repercussions on the industry. So what has happened with, let's say, Zomato and Swiggy? Let's just understand this example. So with Swiggy and Zomato, for any restaurant, the number one cost is the fixed cost, the rent that they pay and the salaries that they pay. With Swiggy and Zomato, they don't need a lot of waiters. They don't need a lot of space. They just need a kitchen, and they can list it on Zomato and Swiggy, and they don't need most of the fixed costs. It's just the kitchen and the kitchen costs that are associated. So what has happened? The entire industry infrastructure has changed. A lot of cloud kitchens, cloud chains have come up. And these people you can't go and sit and eat there. You can just pick food from there. So this has become new competitive threat to existing players who have had a lot of space, lot of sitting space, fixed costs, and they're not able to compete in many places. So trends keep on coming and going, and we need to be on top of trends as equity research analysts to find good industries, good examples. Next, what are the risks and growth potential, both in the industry and the company? If let's say let's say in a startup, the two founders have known each other only for last 4 months. So in that case, it becomes a very, very fragile relation. It's a real risk that the founders might fight between themselves. Let's say 6 months down the line. Once you have invested in it, for you, there is no going back. So these are the risks that you need to evaluate. Can the government do something? Let's say you're selling liquor. The government can come up and ban whatever you're selling or put heavy taxes on it. What is the growth potential? So these are things, how big can it become? So these are things that we need to understand. Next is competitive positioning. This we have covered already. How well is the company positioned? Next is the accounting story. So the numbers of the company. And lastly, and most importantly, the people who are running it. Are the people running it owners of the business, or are they hired help? That means, are they professionals? Are they like one person can be running 5 different companies and he has interest in all 5 of them? For you as an investor, you only have interest in one of them. So the management and your interests are not aligned in this case. So you need to think on things like that person who's running the business, his sole source of earning or major source of earning should be this. So all these steps are required as an equity research analyst going forward. Now, before we go on to the next step, how to obtain information for all this. And this is all that an equity research analyst does, by the way. After this, it's just a repeat process. However, every case is a new case. Every challenge is a new challenge. We'll take a break here. Not a break exactly, but any questions so far? Anything, any questions? Would love to shoot. Would love to hear it forward. Let me also ask you a question. Let me ask you a question that equity research analyst might ask or might be asked. Let's say there is an industry. I will not take name of any industry. Let's say there is a company that there is an industry that has a very, very intense competition and that has hundreds of players in it. Let's say Surat textile market, or let's say textile industry in general. It has a lot of competition, hundreds of players, maybe thousands of players. In this case, if I were to ask you what kind of investment strategy, what will you think? Like, how will you approach this from an investment point of view? What can be done in this case? Take a minute, and I would love to hear any thoughts in the chat section, or even if someone would like to take up the stage, what would you do? How would you think about it? Just a minute here. Any answer would love to hear on the chat. So any question, anyway. So one hint, what an analyst might do is, again, I am waiting for chat. So I'd love to hear answers. One thing that they might want to do is try and become either a supplier of that industry or a buyer of that industry. That means if 5 people are fighting, how can I benefit of it? I can either sell them something. How? Because always someone will be trying to pay me more to secure supplies, or I buy something from them. Always someone will be trying to sell me. Always someone will be trying to sell me at a cheaper price. So I will, as a company, I will get cheap supplies. Okay, I have one answer. Get the biggest players in the industry and see how they are been performing off late to decide the health. Okay, Ferry is saying Ferry. Okay, Miss Ferry, it's a commodity market. Yes, it is a commodity market. So let me take this one by one. So textile is a commodity market. Yes. So how do you benefit from a commodity market competing? You benefit from it by becoming a supplier to it, or by providing. So you can provide, let's say you can invest in a company that produces packaging material for this particular company or this particular industry. In that case, there is a chance that you might become profitable, or you might face less competition. Now, again, that's a different story. Packaging has a lot of competition. So then you might look for other supplies. You might want to become a supplier to that industry. So this is called derived demand, a concept. Let's not get into the too technical because it will become too overwhelming for now. Get the biggest players in the industry and see how they have been performing off late to decide industry health. Yes, that is absolutely the way how it's done. Actually, an equity research analyst's job is to find, first thing that they might do is find, for any given industry, find 5 or 6 players and see how they are doing. What kind of returns are they making? And if the returns are good, they might continue. Otherwise, fragmented industry, very high competition, difficult unless you have a strong brand or distribution channel. Okay, so Ferry seem to have some sort of equity research background. Fragmented industry, that means small players. You don't have very large players who dominate 30-40% of the industry. Very high competition, yes. Difficult unless you have a strong brand or distribution channel. So these are things actually a very technical equity research analyst would say. So what can you do? You might have a very strong name, or you might have a very strong distribution, that lot of places your goods are sold, lot of shops sell your products. So these are things how we will think about different industries. This was telecom, this was textile. Let's say we take the example of soft drink industry, only 2 companies, extremely profitable, Coca-Cola and Pepsi. A lot of smaller companies, but these 2 are controlling maybe 80-90% of the market. So this is how things are done. This is how an equity research analyst will conduct their operations. Next, How do you obtain the data? We obtain the data for all this from annual reports. So company constantly uploads a lot of every year annual reports and a lot of data in that. They talk about how their business went about the year. Next, conference calls. So every 3 months, a lot of companies, they organize a question answer round. Anyone can join the call. They can ask questions. Okay, what did the company do? What did they sell? How was the sales like? Why were the sales not high? Why did the margins decrease? All these questions, and you get these conference calls recorded as well as written. So a lot of data is obtained from here. You can even join these calls and obtain data from them. Next, companies have investor presentations. So every 3 months, companies declare results and presentations. So presentations will have things like, let's say, for example, Oyo might declare number of rooms that they have, number of hotels that they have, average occupancy, other than the sales and profits. So these are things that are very critical for us. A hotel chain can tell us about the number of hotel rooms that they have, they operate. A social media platform can talk about a number of users that they have, the time spent by the average time spent by users. Next, management meetings. So this we discussed early on. Managements constantly have meetings, analyst meetings. You can go there, ask them questions, understand what others are asking, and collect data. You can even, for certain times, analysts will also go and meet the management directly, like one-on-one. The reason for that, if you are representing that, now this becomes very difficult for a retail investor to do. But if you're working sophisticatedly in this, then the managements will agree to meet. Next is industry reports. So a lot of companies, let's say RBI, let's say KPMG, FICCI, government bodies, they produce reports that we can download, that we can read, and that tells us about the current health of the industry. Next, associations and government. So again, let's say for automobile, there is this association called SIAM, which is an association for only automobiles. So a lot of their data points are very very important to understand automobile industries. Then competitors will also give all these out. So we collect data from competitors. And lastly, and most importantly, on-ground research. If you want to understand Jio and how it's doing in the market, go and talk to few sellers of the Jio SIM cards. Go and talk to few Jio salespeople. Talk to few Vodafone salespeople. Talk to users of Jio. If you want to understand quality walls, let's say ice cream, talk to few customers outside quality walls ice cream stand. If you want to understand, let's say, Kotak Mahindra Bank or any bank for that matter, talk to few people who work in the bank. Talk to few people who understand banking. So all these things, there are no rules to collecting data. You can just follow anything, but the most important point is getting the right data that's relevant. So how it actually works for an equity research analyst, and we'll wrap it up in the next 10 to 12 minutes. So for an equity research analyst, it begins with 500 companies. These 500 companies can be from a lot of different places, different tools that can be used from different screeners. So all these are different tools that are there. So ideation, there can be n number of ideas. Once we have passive ideas, we will read a few lines about them, maybe half an hour, maybe 1 hour, 2 newspaper articles, 1 newspaper articles. And after that, we will reduce the size to 100 companies. Once you have 100 companies here from different data, so there you'll spend maybe a day or two on each company and narrow it down to 50 companies. These 50 companies are being actively covered. That means you are spending a lot of time on these companies, maybe up to a month, 2 months, 3 months. There is no upside to it. And this is actually not done by one person. This requires a team of 2, 3, 4 analysts, maybe more in many cases. So once you have one company that's falling in your active coverage area, there we will be spending a lot of time going on site. So on site and all is not possible for passive, but here we'll be going on site, we'll be meeting the management, we'll be going through all conference calls, all this, any activity that can include that can include data collection, we'll be doing it. And once we like something, valuations are good, it goes into our portfolio. And this, we will, as an equity research analyst, we will leave no stone unturned to collect as much data about portfolio companies. These are companies where money is actively invested, where money is actually put. And we will so even if we have to slow down this coverage to focus more on the companies that we have already invested in, we will do that. It's most important. These are the most important companies for us because these are our portfolio companies and will require a lot of time, effort. Now, once we have gone through funnel, any question, please feel free to put it in the comment box, in the chat box. Now, moving forward, so investments, as for an investment analyst, for an equity research analyst requires this, an investment philosophy and investment mandate. So philosophy is whenever you work with a company, you will have a philosophy of that company. We buy certain kinds of company. Whenever you start investing individually also, you will develop your philosophy with time. So what will happen? You will start following that philosophy. You will start not liking, let's say, debt heavy companies. Some people like debt heavy companies a lot. So what is your philosophy? What is your what are things that you're comfortable with? What are things that you're not comfortable with? So all that is included over here, your investment philosophy. And when you work with a firm, the firm already has a philosophy. They are comfortable investing, let's say, in consumer facing companies. That means companies that sell directly to consumers, companies like Samsung, or they're interested in companies that sell to B2B, that means to businesses. Next is investment mandate. So once you have your philosophy, these are your likings and dislikings. Next is your mandate. These are things when you work with a firm, you can't do beyond this. This is the legal understanding with your with people who have invested money in you, that you can't buy a certain kind of company. You can't buy very small companies. You can't buy very large companies. Let's say if it's a mid-cap company, mid-cap mutual fund. So you can't buy shares of Reliance over there. Let's say it's a financial sector focused mutual fund. You can't buy a Reliance share again over there. Any theme that the company follows. So this is legal. You can't go beyond that. You can play around with your philosophy, go at a certain time outside it because this is your personal. But this is something that that is legally binding upon you. So these two things are very important for an investment analyst to actually understand. So what we have done actually is we have created products called industry sheet, business sheet, management sheet. So we will not go in very great detail because these will get technical in nature. So what industry sheet does is very quickly, to understand an industry, what are the things that you need to look upon? Next, to understand any given company, what are the things that you need to understand? And to understand any given management, what are the things that you need to understand? So for industry, you need to understand how big is the industry. First, why does the industry exist? What is the value proposition? Who are the different players in the industry, different suppliers, different customers? Then what are the industry characteristics? Any news that's coming up? Any future outlook? So these are things that are very important. Profit forces by Porter is a technical term that means how competitive is the industry, who has more bargaining power, the suppliers or the distributors. And again, a very good point pointed out initially was the health of bigger players in the industry. So that is very important. Financial health of bigger players or even smaller players in the industry. That is a clear-cut indication of how the industry is doing right away. If majority are not doing well, that means industry is struggling in one way or the other. Next, once we have understood the industry, again, these are very detailed, but for benefit of time and for simplicity, otherwise it will get very complicated. We will stick to the broad topics. For business sheet, we need to understand the product, the people behind it. People by people, we mean the key relations, the suppliers, the buyers, all these people. Again, the employees as well. The price that the product, how it's priced, the pricing strategy of the company, the processes that the company has, any cost benefits that they have, structural benefits that they have. So for example, in cement companies. For cement companies, they have their majority cost is logistics. Logistics form very high cost because cement is a high volume, low cost item. So again, a very important factor here to understand as an analyst is how close is the point of manufacturing to the point of consumption. If they're very far, the company will not be able to sell in a cost-effective manner or will not be able to compete in that market. So cement produced in Gujarat cannot be sold in maybe, let's say, Tamil Nadu, because the distance is way too high. The transportation will make the cement very expensive as compared to locally produced cement in Tamil Nadu. So these are things that we need to understand the competitive position of company. So here Ultratech, what they have done is they have very systematically always built factories very close to railway stations, railway points, and very close to point of consumptions. So that is why they have done fundamentally well for themselves compared to others and become big. So this is how business sheet helps you identify companies that do well. Lastly, management sheet. That means what is the management's vision? What are they trying to do like 5 years into the future? What are they trying to build? Next, their execution ability. So how we judge the execution ability? Let's say the management said 3 years back, they said that in next 3 years, we want to do this. Did they do that? If they did not, then there is maybe a good reason why they did not do it. COVID can be a good reason. You can excuse them for something like COVID, but you can't excuse them for something like the market was not good and we could not find good people to do it. All those reasons are not good enough. So what is the reason if it's not happening? Then what is the compensation? Do they hold large number of shares in the company, or are they mostly interested in their salaries? Then have they done anything that's not correct in the past? Integrity. Have they done something that's against shareholders? So these are things that an equity research analyst does. And lastly, again, they go on ground to get on ground data. They can go and talk to distributors, suppliers, other analysts who have gone on ground. They can talk to other companies. They can talk to competitors. So all these are where you can get ground data, real-time data. Research stations, that's a feature that's actually in one of our products. Won't be very useful for discussion right now here. But this is how data is collected. So this is how an equity research analyst works. This is what equity research analysis is exactly. So now someone who wants to become an equity research analyst, what should they do? They should start. So these are the points that actually should be followed. First things first, read books. Equity research is mostly about reading. A lot more you read, more you are aware, and more you can take actionable, more you have actionable ideas there. Next, read annual reports. Annual reports is real-time execution by different companies. What is working, what is not working. So read annual reports as much as possible. Attend management meetings, as many management meetings that you can attend. It becomes a bit of difficult if you're not a professional equity research analyst. For someone who wants to become analyst, definitely most of the events are done in Mumbai. Attend a few events at least. Talk to the management. What are the questions like, or just hear them out. They'll explain the business. They will answer questions. A lot of it happens. Publicly. Next, focus on industries. So I focus on understanding different industries rather than companies. So it's for any beginner, it's very fascinating. Okay, how Kotak, let's talk about Kotak, let's talk about Reliance, let's talk about XYZ shares. They focus on share. The whole idea here is we have not focused shares even once in the entire duration. We are least concerned about the stock prices other than when we are buying it, what is the price? Because you can't control it. What you can control is which companies will do good. You can make a good guess of that. You can make an educated guess of that. You can't make a guess of which shares will go up, which shares will go down. There is no system on the planet. If there was, the person with that system would have been one of the richest or the richest amongst all. So if in the whole idea is focus on businesses and companies, which businesses will do well, which industries will grow. So for example, if you think that for example, you think home delivery of things will continue, will increase. People will start ordering more and more of different things and not go out. So which industries will benefit from that? Maybe packaging industry. So with Swiggy and Zomato, a lot of food packaging companies have come up and they're doing exceptionally well. Let's say a lot of logistics companies. So with online deliveries, with e-commerce, logistics companies are doing extremely well, or they are growing extremely well. Profitability is a choice, not exactly a choice, but depending upon how they take their business decisions. So the idea is focus on understanding different industries, identify and understand as many industries. Even if you identify good industries, you might not need to pick companies. You can pick 3 or 4 companies across industry and just spread it out. This is called basket approach, actually, where you don't pick the company, you just pick the industry and buy 4 or 5 companies there. And if the industry does well, your portfolio will do well. And this sounds simple, but it is an extremely powerful way to conduct this. Next, find as many internships as possible. Internships, paid or unpaid. The idea here is not paid. The idea here is just being in that environment where things are changing, where you thought something will happen and it did not happen, or where you thought something will happen and it did happen. So this is something that is very critical, but internships on day one will not make so much sense. Do these things, and then internships would be much better. And lastly, conduct basic on-ground research. Talk to, if you're talking about supply, let's say home delivery or rather packaging, go to a small packaging material manufacturer in whatever is the closest place that you are working at. Even if you visit their factory, you'll understand a lot about how entire packaging works. How much waste do they generate? Where can they save money? So there are so many things that can be done. And these are the activities, steps that must be done to become or to create a career as an equity research analyst. So with this, we will wrap up. We'll wrap up discussion for the day. Any question, would love to take the questions in the chat section. And also before that, I would love to invite all of you to join Zebra Learn community. So at Zebra Learn, we have built a wonderfully, the team has actually built a wonderful place where you talk all things finance. So what you can do is you constantly get good feed, good point. You have a lot of these different clubs that you can join. Actually, we have just released it and be amongst the first people to join in. We constantly keep on posting good content, amazing content on everything that's to do with finance here on different topics. You can get enrolled in different groups. And also, I would love to invite all of you to regularly attend events that we do. We do a lot of events and you can find the calendar here. Almost every day we plan events. So tomorrow's event is about careers in finance. And a lot of these events are actually by experts. We are getting a lot of experts again who are working in the industry. So all these are different events by different people that we have, that are different people taking the events. So would love to invite you to all this and explore the community. Now let's just come back. Any questions? Would love to hear over here. Any questions so far, or not so far, but any questions from the discussions, would love to take. Any questions about us, about Zebra Learn, about the topic today? Any question that you want to ask me as well, I would love to answer. So I don't see any questions so far. It's been wonderful experience. Okay, I have one question. Oh, great session. Thank you, Ferry. Kind of you to say that. Any question, would love to hear. And also I would I would love to see you in the community. Nishant, I would love to see you. Anshuman, Chandresh. Thank you everyone for taking out the time first. Thank you, Rohan. Would love to see you in the community. All right. No questions so far. So join the community. Any questions there, you can ask me. You can ask any. We are inviting a lot of experts who have been working for 10+ years into different domains. And personally, these are my contact details. So if any questions, anything, you can simply ask me here. I can get you in touch with the team as well. Thank you. Okay. Thank you, Aditi. Any feedback? I would love to hear the feedback as well. So actually, this is one of our first events. Going ahead, we expect much larger numbers. So any feedback, actually, we would love to improve. Thank you, Chandresh. Thank you. It's very kind of you to say this. Any feedback? What could be done better, Preet? Thank you, Preet. Would love to meet you in other events. All right. Any feedback, just reach out to me personally as well, and that should be very helpful. Thank you again, everyone. Thank you, everyone, for taking out the time. So I would end the session. Thank you.